This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
On the gold market, the daily time frame, in fact, the same picture. You can see that market still stands around the inside intraday confidence support areas. You can see for the fourth day in a row, and here we have discussed the ABCD potential move or appearing of the butterfly buy. Both scenarios are still possible, but you can see the CD leg, the shape of the CD leg is a bit ugly for normal ABCD price action. Anyway, the upward continuation is still possible. So it could happen because market shows just a reasonable retracement on the intraday charts. It hasn't broken yet the significant support area that probably could lead us to think that the downward move will prevail. But currently market still stands at the significant support. Also take a look that the MACD predictor indicator comes closer and closer to the current price action. It will hardly happen today, but on the beginning of the next week there could be some sort of the stop grabber special or something of that sort that could let us get the more clarification on the current situation, if of course we won't get it today. What we see on the intraday charts? On the intraday charts there are a couple of thoughts. First of all, that is on the 4-hour time frame, you can see how market is challenging, testing the confidence support and weekly pivot support one. So you can see first touch, retracement, second touch, pullback, third touch. Now the third challenge of this confidence support trend has turned bearish here. Well, what we could do here with this testing? Well, if you are bullish, you probably have the best opportunity to enter because market now stands very close to the invalidation point of the potential bullish position. Because if market will move lower and take out of these lows, probably this support area will fail and market will continue to move down, because that is probably will be an invalidation point for the short-term bullish position. Besides, take a look at this pattern. That could be the butterfly buy. Butterfly sell opportunity. That could be the left wing. That could be starting point of the right wing. Okay, if this will be the case, this will be the invalidation point of this pattern as well. That's why now market stands very close to this area, and in fact that is a nice area to think about enter long if you have the bullish view on the market, because this situation currently gives you possibility to place a relatively tight stop. If you're bearish and if you have entered short as we suggested around this area with the stops against this high, well, probably that's not a bad position. Well, right now it's difficult to advise to enter short here because market currently at the support, and that could be the reestablishment of long position. So that's the risk. Although we see that market has failed to move above the weekly pivot point, that tells that gives a bit more confidence on the bullish side, because you can see market has tested weekly pivot point once, second time, but held both of them both times and returns right back. This tells that probably the sentiment on the gold market is still bearish. Also take a look how market developed respect of this area right here. Yesterday we said that this was the Gartlis triple to buy, so that was initial swing down, initial swing up, ABCD retracement and continuation. But market has stopped right at 100% extension, so that was just ABCD retracement from the first pullback, no acceleration to the upside. So from the bearish point of view, it makes sense to take a look at the hourly time frame, because here we see the trend is bearish as well. But for the bears, if you haven't entered short at this area, as we discussed yesterday, you probably could be focused today on that level or that level. Probably this level will be more useful because gold likes to show the deep retracement. So 1601, 1602 area is the area to watch for, because if market will break this area to the upside, it will entering in this area against these highs. So if market will break this area and will move above these highs, this will simultaneously tell about two moments. First of all, market will exceed this high and exceed the weekly pivot point to the upside. And second is that could be the starting move of the upward appreciation of this butterfly pattern, and that could challenge these highs. That's why it makes sense to focus on just on this swing to the downside. This also let you to get some tight stop and relatively low risk with this short position, because if you will be right, in this case market will probably take out of this lows and continue move down. That will be a nice risk reward ratio. But if you will be wrong, your risk will be relatively small, and you will be able to think about turning your position to the upside if market will really move above these highs and continue move higher. So that's the general thoughts currently, because on gold market, in fact, we do not have clear pattern to stick with. Market, in fact, shows rather choppy price action, because in fact here is struggling two major setups. First setup is the bear trend that now stands on the gold market and has started even from previous year and the current year. And another situation is the Cyprus turmoil. From the Cyprus turmoil point of view, it's still some demand holds on the gold market, because this situation hasn't been resolved totally yet. But from the other point of view, the overall gold bearish trend in the short-term perspective that suggests some downward continuation also stands here. And this struggle leads to some choppy price action when depending on news and rumors, different price action prevail day by day. So yesterday, a couple of days ago, you can see it's moved down. Later, when there was announced the withdrawal of about 80% of deposits on the Cyprus, that was splash up. Now this rumors and event moved to past, and now gold market returns right back. So in fact, this area has significant value for short-term perspective, and that level also has significant value for the short-term perspective. So if market will take out of these highs, then we will see move to the 1635 area. If market will take out of these lows, well, I will not dare to suggest that we will see move right to the 1533, 1535, but some downward continuation we will see if market will pass through this significant support area. Besides, acceleration above of these highs could lead to appearing of the butterfly cell on the daily time frame that in fact coincides with the move to the 1635 area. Well, that's my current thought on the gold market. Decide by yourself, would you take any positions currently, or will you wait for some more clarification? For example, you could wait when the market will deal with this top. If market will exceed it, then probably you could think about entering long. That will be a bit safer, because in this case the shape of this butterfly will be a bit more clearer than now. So that's a bit personal question, depends on your trading style, your approach to the markets, but that's just the areas to watch for and the patterns that could appear in the market in the short-term perspective.